Hello everyone, and thanks for watching. Bryan here with your Las Vegas market update for February. Now, I'm calling this the housing bubble episode because after you see the data that I've compiled, there's a very provoking argument as to why our real estate market is in severe trouble. Today, I'm going to skip right through our typical topics, such as the notice of defaults, inventory levels, and what's actually making up the inventory. The reason we're going to breeze through this is because I want to spend more time illustrating to you how poorly the market is performing and why we're in danger of seeing an actual bubble bursting soon. So let's get started. First are the NODs, or notice of defaults. Simply put, there's nothing going on here. We always look at the notice of defaults to provide us with insight as to how much foreclosure activity we'll see 6 months from now. Last month, we only saw 272 NODs. With 2 days left in January missing, we're only at 259. Since October, the notice of defaults have fallen off of a cliff, and who knows when that's even going to change. Next are the inventory levels. As you can see now on the screen, we plateaued out in October, but since November, we've dipped about 8%. The good news is that inventory isn't blowing up like it was last summer, but just remember that inventory is actually decreasing a little bit. I'll explain here in a little bit why you need to remember this information. Next is the breakdown of inventory. Right now, 16% of the market are short sales, while only 8% of the market are foreclosures. That leaves 76% of the market consisting of so-called traditional sales. Now, frankly, these numbers have been steady for the past few months. However, what's interesting is this. Short sales were only 12% of the inventory back in September. Now, it's 16%. The reason why there's a higher percentage of short sales sitting on the market is because when there's no inventory like we had last January, people will buy whatever they can get their hands on. Now that the market has slowed down and there's plenty of inventory, buyers are less willing to stick out a short sale when there's plenty of homes that they can easily purchase without having to wait, 3 to 6 months for the bank to approve. Now, moving forward, I would expect the short sale percentage to increase as the market gets worse. Okay, now let's get to the real deal here. If you've been watching me for a while, you know that I predicted the market would decline this year. For over 6 months, I've been telling sellers to cash out before it was too late. I've been telling buyers to simply hold on because the market would be more favorable this year. I told you that builders were going to get crushed in 2014 since new homes became just so overpriced. Essentially, I've been telling you, not so subtly, that the market is either going to adjust down this year or completely crash and burn by the end of it. Well, today, I've got some hard numbers that back up what I've been telling you for over 6 months. First, let's look at resale home sales. Before I go into great detail, let me explain what you're about to see. Last year, we sold 31,000 homes. The year before, in 2012, we sold 35,000 homes. So sales were actually down 11% last year. As you can see on the screen right now, you can visibly see that sales were dramatically down in the beginning and end of last year. Now, the beginning of the year could be easily blamed on the fact that we only had 3,400 homes on the market. Since there was no inventory, it makes sense that overall sales were down as well. But by the end of last year, sales were down dramatically again. But this time, you can't blame the supply. We had twice the inventory in the end of the year as we did in the beginning of the year. Now, check this out. Instead of a bar graph, here's a simple spreadsheet for you. You can see a trend start in October. which, going back to the inventory levels we discussed earlier, inventory plateaued in October. But look, sales were down as the inventory plateaued. 12% for October, 19% for November, and 21% for December. But here's the kicker. Look at last month. See it? We only sold 1,767 homes last month. We literally have about double the inventory that we had last January, and we're down 18%. Then remember that last January was down 24% from January of 2012. In other words, we're down 38% from January of 2012 when we were still like in a normal and healthy market. We've got plenty of inventory now and no demand apparently since the investors have left town. Now to make things worse, let's look at something you won't see anywhere else. Let's see how new home sales are going, since I predicted that new home sales would be crushed this year. Noble Title, product placement, was kind enough to supply me with data that reflects the amount of new home sales closings for each month. This data was further verified by Ticor Title as well. Last year, new home sales were up 12%, which is great. But look closely at what happened starting in September. Sales were down to 32%, then 44%, then 64%, then 79%. Literally, in the month of December, there was only 101 new homes sold. So let's wrap this up real quick. Right now, the market is actually starting to come out of its plateau period, and within a couple of months, I think you'll start to see some dips beginning to occur. Sellers can't blame the holidays soon on their home not selling. Sales are incredibly weak. We're well under 2,000 homes sold last month. Plus, the inventory is dropping, which means that sellers are not putting their homes on the market either. Now, because inventory is not rising, this is actually keeping the market somewhat stable. But this lack of demand is very concerning. Resale homes are starting to see resistance in pricing. And new home sales, well, we already covered that. They've grinded down to a halt. Already, buyers are starting to back out of some of these new homes. One, because they see less expensive alternatives, like right down the street. And two, because the new mortgage changes that just went into effect this year, it affects many of these buyers so that they no longer qualify for the homes that they actually went into contract this past summer. Most of the builders that I've looked into have 20 to even 40 homes standing inventory right now. Now, these numbers are going to start skyrocketing as time continues. We're already seeing new home price reductions, added upgrades for free, and bonuses to us realtors to help them sell their standing inventory. As the months move on, you'll start to see more buyer cancellations, more standing inventory, and eventually some pretty steep price reductions as these builders struggle to meet their numbers. When the media runs with the story that new home closings were down 80% from last year, it's going to get pretty interesting here. What can utterly destroy the market is this. New home sales are getting crushed, but homeowners aren't throwing their homes on the market like they were before. Now, if investors get scared of a housing bubble and they flush the toilet this year and start listing their properties for sale, we could have a situation where inventory does start to rise, prices decrease further, and if buyers become scared to purchase, if buyers get scared, then prices decrease. As they decrease, some buyers feel justified in their waiting and continue to wait for some imaginary bottom. This just perpetuates these price decreases. Bottom line here is the same thing that I've been saying for 6 months. If you're going to sell, you better dump it quick before the market tumbles any further, and the media starts educating the people on how bad the market is actually performing now. If you're looking to purchase, just be patient. It's about to get much worse in a few months from now when all these price reductions actually start really gaining momentum. Now, thanks for watching. Please click here to subscribe and make it a fantastic February, everyone.